Good afternoon, everybody. Welcome to the Financial Pro podcast, or good morning or good evening, wherever you are in the world listening to this. Today, we have an expert on the conversation, Phil Treadwell. I've been following him on Instagram for a long period of time, connected kind of a little bit through Clubhouse as well. 17-year veteran of the mortgage industry, one of the top producing mortgage bankers and independent brokers in the US, national director of a sales innovation and strategy for Thrive Mortgage, the host of Mortgage Marketing Expert podcast, and also recently named 40th most influential mortgage professional under 40 by NMP magazine, and a top 20 mortgage professional of 2020 by Yahoo Finance. Phil, thank you very much indeed for joining us from over the pond.
Well, Gary, I'm excited to be here. I've been watching your content and podcasts for a long time as well, so I'm excited to have this conversation.
Yeah, it's good, isn't it? It's crazy how well the social media can bring us all so well connected, can't it?
Yeah, it's what we're talking about. You know, it used to be from across the pond, but that pond keeps getting smaller and smaller with social.
Without a doubt. So it's great to finally make this happen. I think I reached out to you a little while ago, and then COVID and life and business and things get in the way, and eventually we've now managed to make it happen. So I'm excited for this as much as you are. So just to bring people into context, particularly my audience here in the UK and stuff, what brought you into mortgages? What were you doing before, and then how did you transition into the industry?
You know, my story was a little bit unorthodox, but I don't think when everybody is really young, they raise their hand and say, hey, I want to be a mortgage professional when I grow up. We all have an interesting story about how we got here. You know, mine was I had done a lot of things through college, and my dad's a builder, so he builds custom homes here in the US, and I'd always kind of experienced the real estate side of the industry, and I wanted to take over his company, and he said that he really wanted me to look and see what else was out there before I decided I wanted to go into the building industry. And so I actually answered a newspaper ad for companies that were looking for someone with both sales and management experience, which I had. I'd done some sales. I'd managed like a video store. If anybody remembers Blockbuster Video, I got to manage one of those stores. And the company ended up being a mortgage company, and I didn't know anything about it, but I fortunately had a really good trainer and mentor. I started in late 2003, early 2004, which, if anybody remembers, that's several years before the financial crisis and everything that happened. And so a lot of people were doing a lot of unorthodox or subprime toxic products. But the mentor that I had really taught me how to do a good file, how to really qualify a customer, how to build good relationships with referral partners. He taught me the fundamentals the right way, and just kind of launched me into the industry. He would do black and white photocopied flyers, and he'd put them in this big box, and he'd hand them to me and say, you know, go talk to realtors, referral partners, and tell them to send you business. And I did, and I didn't know any better. I knew enough to be dangerous. And I always laugh because it was probably a year and a half into the business before I knew that I could do a refinance. I was always just focusing on the purchase side of the mortgages. And, you know, I was a young guy that was just trying to make my way, and had a couple of lucky breaks, and had some really, really good coaches and mentors that kind of kept me on the path. And, you know, I looked up, and 17 years later, we're still kicking this game.
Yeah, nice. And you mentioned there the whole leafleting and everything else, which no doubt will come up during the day. Did you ever go to the stage like I did, knocking on doors and trying to get sort of one person to talk to you, getting the door slammed in your face? And
You know, I have done some door-to-door. You know, my door-to-door in the mortgage business wasn't to potential customers or clients. It was more to realtors and referral partners, real estate professionals. I would, back in the day, there was a website called MapQuest that you could figure out directions from place to place. And I would find the directions, the shortest distance between all their offices, so that I could hit all the offices before lunch. I would eat, and then I would do it all again in the afternoon. And I, through another business, did a lot of door-to-door sales. And there was a time in there where I wasn't really making a lot of money in the mortgage business. There's been ebbs and flows. And I had a buddy of mine who owned a company where he sold wholesale meat, steak, seafood, things like that. And we would knock 80 to 100 houses per day. Only 5 or 6 would even be interested in letting us show what we had, and maybe 1 or 2 would buy. And I look back now, and the skills that I learned through some of that door-to-door sales, or some of the getting no and the door slammed in your face, it kind of strengthens a muscle that you need to really have some confidence to go out there, even in this game that we're in, social media. There's a lot of people that, will comment or send direct messages that's equivalent to that proverbial door slam, and you just got to shake it off and keep doing what you're doing.
Definitely. I always remember one of my early managers said to me, when we were doing cold calling, he said, "You're here to find the no's. You're not here to find the yeses." And actually, it was like 99 no's to get one yes. But when you kind of start with that mindset, it makes you more resilient to it straight from the off, doesn't it? So
we did the same thing. It was a numbers game. Whenever someone said no, we counted that as cool. I need the no's to get to the yes. And we would go so far as to average out how much did a yes cost, or how much was a yes worth to us. If it was $1,000 or $5,000 or whatever the amount was, okay, well, you break that up into the number of people you have to talk to get to that yes. And so let's say you have to talk to 100 people to make one yes that's $1,000. Then every time someone says no, that was worth $10. And so we would just sit there and check it off the list of there was $10, there was $10. And that kept us going. And the other thing that was a cool analogy that one of my first mentors gave was, ketchup's obviously really big in the US. We put it on, fries and burgers and everything else. And when you're sitting at the table, if you offer someone ketchup and they say no, well, you don't get all butthurt, like, oh my gosh, they don't like me. They didn't like what I said or how I said it. And so they said, when in sales, when someone says no, just act like you were offering them ketchup. It had nothing to do with you. They just didn't want any ketchup. And so, whatever that analogy is for you, if you're offering salt and pepper or whatever condiment it is, if you're sitting at a table and you politely ask someone if they want some of this and they say no, we don't get all bent out of shape. It was nothing personal. So you apply that to sales, realize it wasn't you. It wasn't what you said. It just wasn't for them. So move on. And I think when people get in that mindset, it makes it a lot easier to go through the numbers.
Yeah, I love that analogy. I've never heard that before, but that's so true. And I never thought about ticking off each one as $10, £10, whatever, to get closer to that as well, because that gives it kind of a monetary value then, doesn't it? So almost you're ticking them off to get the higher sums as you're working in reverse. So going back to a little bit on your story, you mentioned the wonderful mortgage crisis that we too experienced in the UK as well. I actually went self-employed I got into the industry, same as you, 2003, self-employed in 2006, built a business for somebody else specializing in bad and adverse credit mortgages, and went self-employed in 2006, specializing in bad and adverse credit mortgages. So I think January 2009, for example, it was like, there goes my business. It's all gone. And I diversified and did life insurance for 7 years. What was kind of your transition through the financial crisis?
So similar to you, and our mortgage structure is a little bit different here. I started in the industry in the end of 2003, 2000, and first of 2004. And at the end of 2006, early 2007, I also started my own company. It was a mortgage brokerage. And the way that's defined here is you own your own company and you're kind of that middleman between the banks and lenders, which I know is the same term there. So I essentially started my own company. I had a few people that worked for me. And in hindsight, that was probably the worst time that I could have gone out and ventured out on my own. Luckily, in 2008, I was able to sell my company to Wells Fargo, which is one of the biggest banks in the country. And at that time, they were recruiting for mortgage by acquisition. They would find little companies that had good people. They knew they couldn't weather the financial crisis. Hey, we're going to, pay you enough money to close shop and come to work for us. And that's essentially what happened to me. So, here in the US in early 2009, our Federal Reserve Bank, our central bank, started buying up the mortgage bonds or the mortgage-backed securities that, the whole industry was kind of built on. And so rates went way down because it all of a sudden was a much less risky product because the government was involved at that point in time. So rates went from like 6 or 6.5% to like 4.5% almost overnight within like a week. And so 2009 historically was one of my biggest years as a loan officer. But in the US, working for the big banks or the big lenders was not advantageous to customer service, right? They took a lot longer. You didn't have the flexibility. So I stayed there for a while to kind of weather that crisis. And then in 2011, I went back into a model that fit more whatever I was trying to do and my goals. And, I've kind of found a home in this mid-sized mortgage company model where we're an independent mortgage bank. So we still fund the loans with our own money. Some of them we'll keep in service and some we'll sell off to other lenders or investors. But I think that had that not come along, I would have had a very different road coming out of the financial crisis because a lot of people couldn't make it. A lot of people didn't make it. Fortunately, I go back to that very first mentor. A lot of people that were just, they had a mortgage business card and a borrower could fog a mirror, well, we can get you a loan, right? They didn't really understand the core fundamentals of how to build the business. And I just got lucky. I could have gone to work for any number of types of companies, but it happened to be one that said, this is how you qualify a borrower. This is how you structure a loan. This is how you provide great service. This is how you follow up with people. And so going into, 2009, 2010 to, 2011, most of the people were getting out of the industry because they were just other sales professionals that were cycling through that didn't know the industry. And that's really where I dug my heels in. Now, I will say that because the mortgage industry was blamed in large part for what happened in the financial crisis, even though we know it was Wall Street banks and it was a lot of other factors. It wasn't those of us that were on the ground doing mortgages, but at the time people didn't know that. So I didn't even tell people, I didn't use the word mortgage. I didn't tell people I was in the mortgage business. I would make it fancy like real estate finance or something like that, so that I could kind of get around that. But here it is, 10 years later, 11 years later, going through, the COVID crisis, real estate and mortgage is one of the bright spots of the economy. And so that's been really cool to kind of see this transition to where we're looked at as, a great part of our economy, a great part that are keeping things going while a lot of other businesses are struggling. And so that's been fun to see and be a part of. But, those early years were really, really tough. And I think those of us that kind of weathered through and found ways to kind of supplement and do different things, that's paid dividends.
Yeah, so I diversified and did insurance and did that for 7 years before getting back to mortgages in 2016, which I think quite a lot of people did. But did you find it a real fight after the credit crunch to be able to, continue offering loans? Was it steady growth from there up until now?
Yes and no. For my business in particular, shortly after that, I stopped personally doing loans and was building teams as a regional manager, a divisional manager, things like that. And I got to kind of change that skill set into passing it on to the next generation. We talk about millennials are here in full force, and that played a big role in it because I'm on the older side of millennials, but I still relate a lot to it. But I was taught by the older generation, so I was able to kind of bridge those old school success principles into a more modern and relevant world. And so there was a lot of steady growth, but there was a few years in there where the market's been up and down. Obviously, it doesn't go straight up or straight down. We all know that, but it has been steady growth. I think that it's just been in the last maybe 24 to 36 months that we're starting to see products that are similar to what it was before the financial crisis. I'm starting to really be surprised at some of the products that are starting to roll back out. And it's everyone says the market's cyclical, and I see those cycles and those history repeat itself. But I didn't know we were going to get quite as aggressive. Instead of subprime, we in the U.S. we call it non-QM, non-qualified mortgage, right? It's the same type of thing, but I think that the difference this time around is, in the financial crisis days, the assets themselves were extremely overinflated. The value wasn't, it was paper value. There wasn't that actual value in the market. And the other piece of it, I think, is that people didn't have a lot of cash in the transaction. They didn't have a lot of cash in the bank. And I think right now, and this is probably worldwide, but for sure in the US and the UK, I think that people have a little more money. They're having to put a little more money in the transaction. And so even though we're starting to get more aggressive with some qualifying features, they're not dipping way down in credit score. They may be getting creative on some of the qualifying income or things like that. But I think that there's more money in the system that's supporting this, where last time everything was pretty much on paper. And so that's been interesting to see. And then again, the way that we're conducting business, through social media. I mean, my biggest year in the industry, I wasn't leveraging social media at all. I had just gotten on social media, but I wasn't using it to build my business at that point in time. And now we're building entire businesses on, YouTube or social media presence or Facebook ads and podcasting and things like that. And so it's a very, very different world, but it's still cool to see the underlying fundamentals are what are going to set those that are struggling for those that are successful. Those core fundamentals are still the same. You still got to provide great service. You got to, put a good file together. You've got to be disciplined and consistent in how you build it. And so at the same time, it's a different game, yet it's very much the same.
Yeah, I completely agree with that. Another thing one of my first managers said to me was that fact of you need to be marketing 1 to 3 hours every single day. And, back in the day, it was phoning cold data. It was knocking on doors. Whereas now it's producing content, repurposing content, coming up with ideas, creating video, creating assets effectively now. It's exactly the same principle. Like you say, it's just reapplied in the 21st century in many respects. And I'm intrigued. I've seen the film The Big Short. How much of a real representation is that from your side of things?
I was on the ground as an originator, as a loan officer doing loans at that time. And the correlations that I remember seeing in the broader economy or from investors, they pretty well match up. And I've read some, a lot of accounts and whether it's a biography or just a book that, was about what would happen in a few documentaries. And I will say, while there's probably a little bit of a fictionalization of some of the things that happened to the characters, how it unfolded and what happened was pretty accurate, as scary as that is. And the guy that I can't remember his name, the guy that played the Dark Knight, that was kind of the main character in The Big Short. His name's escaped me right now, but that was actually based on a real guy, and who is absolutely brilliant, who is a blogger, who really picked up on this. And a lot of the characters were based on people, and it was a fairly accurate representation. And the way that things were being chopped up were true. People were borrowing against this and chop it up and borrowing against that. And the reason why was that they truly thought people may not pay for their car, they may not pay their light bill, but they're going to have a place to live. They're still going to pay their mortgage. They really, really did. And that wasn't true. Even the data that supported that wasn't true, because what was happening is real estate values were appreciating so fast, people could go pull cash out to pay for a mortgage that they couldn't have afforded in the first place. And as soon as those real estate values stop appreciating, people stopped paying their mortgage. So the financial crisis was triggered. That straw that broke the proverbial camel's back was that real estate corrected, which it always does. It had never seen that much appreciation, and it corrected. And then the flip side of it was when it came time to take back some of those assets to cover some of the debt, not only was there not enough, tangible asset to cover it, all these insurance policies that were taken out to insure the money, there was no cash to back them up either. And, a traditional insurance policy, that company has to have a certain percentage of cash on hand in case there's a bunch of claims all at once. If you have a natural disaster, rest assured your insurance company is probably going to have the cash to take care of it. On the mortgage side, with these credit default swaps and some of the insurance that they were insuring these mortgages for, it was fractions of a percent of what normal insurance policies would have to cover it. So when it came time to cash them in to prop everybody up, there wasn't anything. So again, it was all paper money. There was no real asset or cash behind these things. And so if you watch The Big Short, while again, not every detail is going to be accurate, unfortunately, it's a fairly accurate representation to what happened. Even the credit rating agencies, I don't know if they for sure knew that all of them were just absolute garbage, or if they thought there's probably some stuff here we don't want to see and we're going to look the other way. But again, S&P, Standard & Poor's, or Moody's were the big rating agencies for these collateralized debt obligations. They knew that if they didn't AAA rate it, they would go down the street. It's like paying your auditor, and you only pay them if they give you a good result, right? Our CPA is never going to allow me to have him audit me, but me only pay him if it comes out in a positive way. And that's essentially what was happening, is the people that were supposed to be regulating, you could shop them to find the one that would give you the best thing. And that was a big piece of this.
Yeah. It was so interesting. It's, as I say, I didn't see much of the after effects, but I've interviewed many people on this podcast who, had huge firms here in the UK. And then as a result, had to get rid of, 90% of their workforce and pretty much start again. And others who have grown massively through it and are now obviously thriving. And we've been hit by COVID and Corona, and there's always something every 10 years. You just have to kind of accept it's been a long time coming. But I did a wonderful thing in 2011 as the market was beginning to recover here in the UK. It was suspected, as it had been for a period of time. We decided to move home, and we're having our first child, so it was move out of a flat into a house. And I thought, right, everyone's saying that the interest rates are gonna, they're gonna go up. So okay, I'll get myself a 5-year fixed rate. What happened? They absolutely nosedived and have been nosedived ever since. So I spent 4 or 5 years paying way too much for the mortgage, but house prices here recovered and we made 6 figures in the space of 4 years on a new build, which we would never have anticipated doing. So it just swings in roundabouts, doesn't it, at the end of the day? And I'm kind of saying this for people because a lot of my listeners will be relative, people who are new to the industry. So they might not have even heard of The Big Short as a film on, I think it's Netflix it's even on. So it's just great to get some other insights. So Phil, what is your business like now? How's the makeup? You said you've spent time building teams. What does the business kind of look like behind the scenes?
Yeah, so I wear a few different hats, and my primary position is I'm the National Director of Sales Innovation and Strategy for Thrive Mortgage, and we're a smaller company, but still growing rapidly. And my job is to work with our talent attraction team to find really good talent, as well as make sure that they're the right fit culturally for us. I do some sales leadership where I manage some branches where there's not another regional leader that can work with them. But a lot of what I do is growth initiatives. Hey, where is the industry going? Where are some untapped markets or underserved communities? Also, where is technology taking us? Some of the marketing technology side of it. Obviously, I'm very passionate about podcasting, audio, and voice. And so it's okay, is there going to be some functionality or some adoption of smart speakers like, Amazon Alexa or Google Home or those types of things? So, I spend a lot of time working with our marketing team and our IT team on technology and platforms of how do we reach a relevant customer? Because I think in today's day and age, in almost every other business, you have this technology platform, this great customer experience, and it's very relevant to how we're doing life from our mobile device. But the mortgage industry and real estate industry is very far behind. Like, we still want them to sign a piece of paper, right? As opposed to signing an iPad or a digital platform or whatnot. So, part of what I do for my company is to try to, as Wayne Gretzky says, skate to where the puck's going to be. And that's something that I enjoy doing. That's why I like having conversations like this. That's why I interview a lot of, forward-thinking people on my podcast or participate in social media at scale, because that's where you're going to find out not only what people want right now, but where people's minds are headed. As you said, I'm also a podcast host. I interview people in and out of the industry. We've had a lot of personalities on. You're scheduled to be on it as well. And we have conversations, everything from tactical ways people can build their business to what's the mindset shift and things of that nature. But I spend a lot of time creating content and having conversations with people. A lot of my team, same thing, is repurposing content and social media. And I think people are starting to become numb to it. And I say that because we, just like you said earlier, create content, repurpose content, use social media. People hear it to where it's almost become a chant, and I do the same thing. And I want to stop and make sure and let people understand that the whole reason we're doing it is the same reason we used to make cold calls or knock on doors. It's we're trying to reach people. The cool thing about social is you're able to reach infinitely more people than you ever could, because it compounds the time, right? How many hours did it take you to knock 100 doors, right? I knew how long it took me to do that. And you go to your community events and the happy hour events and all those. There's only so many hours in a day that you can do those things. Where on social media, you can put out a piece of content and be doing something else. And this is over here reaching people. And if you do it in a relevant way, if you do it in a non-spamming way where you're sharing information like on this podcast, people that want to hear that kind of stuff will listen. Those that don't, that's okay too. Something else may resonate with them. And so that's why I think that this whole conversation is important. And fortunately, I work for a company that understands the value of a guy like me in the middle of a workday or in the morning of a workday being on a podcast in the UK. Can we draw a defined ROI on that? No, we can't. But what we know is the more content we create, the more conversations we have, because there's no straight line to success that's jagged and all over the place. We're just going to do enough of the right thing and be consistent and persistent over time. And what we know from that formula is that you come out ahead and you win. And so again, long story short, I wear a lot of things, but it's all pretty much the same thing. I talk to people, I network, I think, I learn, and I create content. And it's kind of a fun job these days.
Yeah, it's crazy how it changes, doesn't it? It's similar to my role now, effectively, in a similar kind of way. And it's interesting you said there as well around, I classified it this morning. I did a Facebook Live this morning, which is going out as a future episode. And I said that what people need to understand is the difference between lead generation and audience building and why you do the two. It's like you've got to almost lead generate in the same way that you have to make, you said cold calls. You've got to do 10 cold calls to get 2 sales. You've got to do 10 times the amount of content to get 2 inquiries. And it's that consistency in building your audience, building your followership, coming over here, going over there. And eventually it has the knock-on impact of, you know, we're going to learn things from you today for that we're coming over here. And that's going to be one of my questions. And the same way that I'm going to learn from you and vice versa. It's just the benefit of speaking to others is what has a knock-on impact to everything all round, doesn't it? And you said there about actually focusing on where the mortgage industry is going. And, you know, we're still in the dark ages over here. You know, most lenders don't want electronic signature. They still have to use a quill and, you know, parchment is that bad. It's like, come on. You know, occasionally they might allow you to use a pen and ink. But
you're taking sea life to squeeze the ink out of them into a bowl. Yeah.
Yeah. I had one of them when I was at school, actually. You used to squeeze it, suck the ink up, and then put it into your nice little calligraphy pen or whatever it was.
That's awesome.
Yeah, but where do you think the industry is going then? Like the way they're trying to do in the UK is work from lead website capture into mortgage or the brokerage CRM system. The brokerage CRM system talking to the quotation tool, you know, the researching tool where it has hundreds of lenders and thousands of products. And then that eventually connecting to the archaic banking systems where we can then do our decision in principles and our agreement in principles rather than 1 data entry, 2 data entry, 3 data entry, 4 data entry to then get to the end of the process in 30 million years based on how the world is at the current time. Where do you think it's going? Is your process that kind of inefficient, should we say?
Yeah, I mean, yes and no. I think that we've been doing it like that for a little bit. We've created a few efficiencies. The process now with most lenders or brokers is going to be similar. People are going to apply online through some type of POS or point of sale, right? Our company actually has an app, and there are a lot of apps out there, but whether people are applying online or through their mobile device, it's the same. Ours in particular, they can connect their bank. They can connect if they use a nationwide tax preparation service so that those automatically get imported and they don't have to gather them for us. And as a lender, because it's a third-party verification, we don't have to verify it later on because we were able to gather that from a third party. From that point in time, it does go into a CRM as well as our LOS, what we call loan origination software, where we're pulling credit and we're pricing it through a similar pricing engine of which investors are offering which products and interest rates and things like that. Then we prepare a file to go to underwriting. Pretty much that entire process is done digitally. We're trying to minimize the pieces of paper that are being used. And with our particular company, we're able to underwrite the file and qualify borrowers. And from that point in time, we'll close the loan using our own money. And then based upon the type of loan program, we can potentially, sell off that loan into the bigger bond market, the bigger financial system. Now, that's pretty much the process. Where it's different is the different types of CRM or POS and LOS that people use are going to be more or less user-friendly, are going to be more or less efficient. And that's what a lot of people are selling, the experience of it. Unfortunately, or fortunately, depending on how you look at it, the mortgage industry is a commodity, right? No one mortgage is necessarily any better than the other. There may be some better terms, this, that, and the other, but we can't commoditize the value that mortgage, financial, real estate professionals bring to it. And I'll to answer the question, I want to go to the stats a little bit. The millennial generation is, one of the largest generations in history. They're one of the most socially minded generations in history. I mean, social media is proof. But if you look at things like, at least in the US, indie brand cosmetics, independent companies, craft beer, certain brands that have blown up even worldwide, there's a story behind them. There's a culture within the company. This generation cares as much about the story behind the brand as they do the quality and value of the products that are being offered. So when you look at it from that respect and realize that millennials were either at home or just out of the house during the financial crisis, they waited to get into home ownership longer. They still want a technology and social driven process, but they still want to work with an advisor. They want to make sure that they're not making the same mistakes as the previous generation. And so from that respect, we're having to make sure that we look at other verticals. I mean, even Amazon or, a lot of these digital platforms that are online, they've changed the way people consume products. They changed the way we review companies. It used to be, if I got free shipping, even if it took a week or 10 days, we were excited. Well, now, even when I shop at other stores, because Amazon gives me free shipping and it comes in 2 days, like if you want to wait 5 days even for free shipping, I'm like, 5 days, that's a long time. And so in the mortgage industry, we have to realize, just because we understand with this process and it takes time and what we have to do to get from A to Z, they may not, and we have to educate them. So how do we educate them? Content is a great way to do it, right? YouTube channels and stuff on your website. But I think that as we're teaching people to use a mobile device, if we teach people to, use smart speakers, if we teach people, because they're already doing it in other ways, we can get a leg up in the US. And that's one of the things that we're doing. In the US, our real estate professionals it's called the National Association of Realtors. It's one of the largest organizations in the country. They do a report every year called the Generation Trends Report. And in the US, 98% of people across all generations were online looking at homes, on the internet somewhere throughout the transaction, which isn't surprising. Everyone kind of does that. What may be surprising to people is about 2/3 of people start their process looking at homes online before they ever talk to a realtor or a mortgage professional. And with millennials specifically, 85% of that was done from a mobile device. Okay, so what we're saying here, people are going online, they're not calling a realtor or a loan officer first, and they're doing it from their phone. That has our attention, right? We consume TV on demand, and if we're watching a live sporting event or, our dog ate a remote where we couldn't fast forward through commercials, what do? We pick up our phone. If we're sitting at, in the waiting room at the doctor's office, what do? We pick up our phone. So that's where people's attention is. And so what we have to do as mortgage professionals is, how do we make this process that's fairly archaic? How do we continue to make it more efficient for them? How do we pair it up with what other verticals are doing and also keep their attention through it? And if we do that, we become more referable. They say, oh yeah, don't do that one over there where they wanted you to print everything out and take it into them. They don't want to sign 100 papers at the end of the transaction. So, oh, you can do it from your app. And if you do have a piece of paper, you can take a picture of it with your phone and upload it. Like, that's what we're doing, and that's what we're trying to talk about. And now we want to get to the point, and I'm going to have to unplug my Alexa device because she'll start going off. Hey, Alexa, what is Phil Treadwell at Thrive Mortgage offering on loan programs? Where's the status of my loan product right now? I mean, we're even talking about where this, Amazon device, whenever a package gets delivered, she sends a notification and turns yellow. Okay, well, during the different stages of the loan process, how do we push notifications to their smart speakers or to their mobile phones? And there's ways to do different things like that through text and through email. But we're trying to say, okay, how do we take this old archaic business and make it more relevant? That's really the bottom line.
Yeah, it's so key and so true. And it's it's annoying sitting here from this side of things because like I've spent time working on processes and systems and automated a lot of my own brokerage, and I'm now in the process of getting to a point where I'm frustrated with the other systems that are out there that I've started to bespoke build my
Yeah.
own one with a company in the UK. But most companies and most lenders here in the UK still do not allow open banking, which is where you can get access to somebody's bank statements. They still don't allow access to their credit report. It's like the system, and I'm intrigued where you were going and what you were going to say, because we're just 5 years behind you.
Yeah, totally.
So it's like we're listening. Everybody in the UK who's listening to this is going, yes, there's some light at the end of the tunnel. We might actually get there.
Well, it's funny because we look at other industries in the US and say, like insurance or even financial services and financial planners, they're even further ahead than we are. And so people will talk about what we've done, at least my team and other peers of mine. Oh my gosh, what you've done in the mortgage industry is so cool. Well, not really. We just looked at other industries and saw what was coming and tried to position ourselves to grab it. And it is funny because I think that automation is going to be key. I believe that the future of production, as far as producing loans in the mortgage business, is going to revolve around technology, automation, and access to data, right? Yeah. Getting into behavioral analytics. Like there's a company here that they used to do website development for financial and real estate websites. And so they've got their code on hundreds of thousands of websites, and they can predict 6 to 9 months before someone is actually in market when they're going to be in market. So you can give them your customer contact list. They can cross-reference it against their database and say, these people are 180 days out. These are 270 days out. These are 75 days out, because of patterns and recognition in how we behave online. And companies like, I don't know if you're familiar with Target. It's one of our big, retail stores. I don't know if you have Target in the UK or not, but this particular store is a big department store. They've been doing this type of thing for years. What they would do is they knew based upon your buying habits, they knew based upon your internet traffic, whenever they would send advertisements to your mailbox, like those little mini newspapers that have coupons and stuff in it, the one in your mailbox would be different than the one in your neighbor's, because they knew how to place things. And they would even know based upon your behavior whether someone was pregnant or expecting a new member of their family. And so they wouldn't put baby stuff on the front of it, but they might put baby stuff next to a lawnmower or a cutting board for your kitchen and strategically place that stuff. And I'm like, this stuff's been around for a long time. We're just now talking about it in our industry. And I want to give everybody hope that's in the UK. Is I think that we're trying to drive the bus in the mortgage side in the US. And I think that there's a lot of other countries. I know there's a progressive, there's a huge push in Canada as well. And they have a similar model to you guys. And so I think really internationally, if we can continue to lock arms and say, this is what we expect, this is what our customers expect, this is what we need to do to be relevant. In the US, for the first time ever, the consumers are telling the industry what they expect in the mortgage process, when for decades, probably ever, the mortgage industry says, this is what we offer and this is how we do it. If you want a mortgage, this is what you need to do. And that's not happening anymore. And that's cool for us. And the other thing I'll say is that in almost every other industry, you've had technology companies, whether it be Google or Apple or whatever, technology companies will come in and build business. And in mortgage, for some reason, we have businesses that are having to create technology. Just like you said, we're figuring out automation processes, or we're finding a cool thing that we do, and then all of a sudden we monetize it and we spread it out to other people. The challenge with that is there's very little integration. There's no way for one industry to collectively move forward because we're all kind of siloed out there. And I'm still kind of waiting for a company or two to come along, or to kind of emerge and say, hey, we're gonna grab this baton and we're gonna run with it. We're gonna help everybody really, continue this conversation and make integration capabilities easier. We're gonna help you with automation in a relevant way. I think it's coming. It's just there's so many layers to this, and because you're talking about a banking and financial system that most countries are built upon, I understand the hesitation, but I think that if we're having the right conversations, we can move that down the field.
Yeah, I agree with you. And I think it's exactly as you said there, to kind of summarize it for the audience as well, is that it breaks down into, particularly here in the UK, and I don't know if it's the same in the US, but it breaks down to the brokerage doing their bit, the data capture, the website capture, the mobile app, the method of sharing paperwork and everything with you as a broker, making that part of it streamlined and efficient, because that's the part that you can really control that hooks them in. You know, we've got a couple of online companies here now called Habito, Trussell, and they've grabbed that. They've got VC funding. They've gone all in on the online lead generation. They've structured their system so that everything is digitally driven online. You know, it doesn't get into the complex stuff. Like, you would never get something, you'd never use it for adverse credit or self-employed or, you know, subprime mortgages, etc., or complex buy-to-lets or investment strategies. But for the millennial, it's perfect because it's all online. You probably talk to a human for once, maybe 10 minutes in the middle of the process, you know. And if you're listening to this, you need to control the way in which you take your customers up to the mortgage quoting portal. And at the moment, we have one here called 27 Tech, and that sources the mortgage, that produces the illustrations. They're working on the open API through to the lenders' websites. They're actually also trying to bring in all the open banking, all the budget planner building, you know, all these methods that then if they're that one platform in the middle, it's broker system, 27 Tech system for the mortgage element, and then 27 Tech will connect to the lenders.
Yeah.
So fingers crossed, if they're able to do their part, it's then down to the brokerages to try and sort their elements of it out. Which, yeah, it's still an interesting time, and I think you've said the right thing. I think still with the millennials, they're going to want to speak to a person. That's the main thing. I think brokerages over here, I think on the latest stats, don't quote me on this, but I think we supply 75% of the mortgages, you know, to the banks. So the industry is still huge over here for everybody who's partaking in it. So you mentioned one thing there as well in terms of your journey, which I think is vital for those that are listening to this, that are thinking about recruiting people, bringing people into the business. You know, you mentioned coaches and mentors right at the very beginning. You then mentioned you work on team and culture and driving that part of it, because that's so key to the millennial side of things as well. Mm-hmm. You know, what's your best advice in and around building a culture in a mortgage brokerage, in a thriving mortgage brokerage, to dive onto the name of your firm?
You know, I will say that the most important thing for a company to do first is understand their why, their mission, vision, and values. Then it becomes very easy to look through the lens when you're talking to people to see if their why, their mission, vision, values line up. And I think we make this conversation extremely complicated for no reason. Most people are in the mortgage business in the US for sure, because of the income opportunity that you have, as well as the flexibility from a lifestyle standpoint, right? We're not punching a time card, you know, from a certain time to a certain time. We work a lot of hours, but it's because we choose to, right? We're building our business. We're essentially mini entrepreneurs within a bigger company. And our company specifically, our motto is we exist to help people thrive. And that's not necessarily within the mortgage industry. That can be in our lives. And we focus on other parts of it. How do we help people outside of just their day-to-day jobs? How do we help them in their life? How do we help their health? How do we help, you know, their mental and emotional well-being? So when it comes to finding people that you want to work with, you need to find out what it is they want. Some of the people that we attract talent-wise is because we're very aggressive and progressive in our ability and desire to have marketing technology and be kind of a front runner. And when you talk about a true e-closing, digital e-closing from very beginning all the way to the end, a true digital mortgage, in the US, we now have certain states have adopted what's called a RON, a remote online notary, meaning you don't physically have to be there. The notary can be through a Zoom call or through something like this. And in the state of Texas, I'm in the Dallas, Texas area. In the state of Texas, our company did the very first 2 remote online notaries as soon as they were legalized. And so a good portion of the closings we do are either hybrid closings, meaning they're signing a big chunk of it digitally and then they wet sign, you know, with ink and parchment like you were talking about earlier. And then a lot of them are just true digital e-closings from end to end. And I mention that because that attracts not only consumers, but it attracts the mortgage professionals that are trying to attract those consumers. And then you get into what we value as a company. And that's really the bottom line, is if a company is very clear on their mission, vision, values, above and beyond the numbers, the income, the growth, and what it is they're trying to accomplish in their communities, within their employees, then it makes it easy for the people that come along to want to come on board. What's happened is our company shifted the paradigm a little bit to where more people want to come to work for us than we want to hire. So now we're able to be selective. That's why we call it talent attraction as opposed to talent acquisition. We do have recruiters that go start conversations because we want to be intentional in the people that we hire, but we don't hire every single person that wants to come to work for us. And I think any good company can say that. So we're not exclusive on that. But for me, I tell people the mortgage industry is not my passion in life, but I'm very passionate about it because of the opportunities to meet people, to create income, to sow into things that are my passions in life, whether that's giving, whether that's my family, whether that's nonprofits or any other causes that all of us have in our life. If you're passionate about it and you're aligned with people that think like you do, it's a good recipe for success.
Yeah, I love that. And it's so, so, so true. You say that there, it's like, really, does anyone like the mortgage industry? It's like even the clients don't like mortgages,
It's true.
But it's just that realization of, our whole ethos in mind is helping people to achieve more.
Mm-hmm.
So it can be more in terms of deposit by giving them that starting point. It can be more from a point of view of the home that they want to get to next, more from an investment perspective. And you do attract, when you put those messages out for clients, you actually do attract the right type of people into your business, don't you? Because no doubt with you being on social media and you doing the podcast and you talking about those elements that you're passionate about, and it comes through really well in everything that you talk about, you're attracting that certain type of person who you resonate, not just as a client, but also as team.
For sure.
And then it just makes it easier to build a business if everybody's singing from the same hymn sheet at the end of the day.
Yeah. And I think that, everyone has their own reasons for changing companies, but typically it's either to make more money with the same amount of work or to make the same amount of money with less work, right? No one says, yeah, I know I can make more money if I work harder. Well, you could stay where you're at and do that, right? So can you create efficiencies for people so that their top line goes up, or their passive time is increasing. And so having those conversations is important. There's a guy right now that I'm talking to that has blown up his YouTube channel from a few hundred to like 40 or 50,000 subscribers, and it's a direct to consumer YouTube channel around the mortgage and real estate industry. And he's absolutely not interested. He's more of a Gen Zer. He's a little younger than a millennial, and he's not interested in being a loan officer or being in the participating in mortgage in the traditional sense. And so we're having conversations because I think that we can find a way to partner with him and him still maximize revenue by creating and converting some of these leads, because a company like ours can offer a lot of different types of products, to them. And I share that because we've got to get away from the old school mentality of who looks the best in a suit, who can talk to realtors better in front of an open house or whatnot. And we've got to get to who's going to relate to the most people and who are the people that are going to attract other people like them. And he likes, even though I don't have a huge YouTube presence, because I do have a podcast and in this content creation, machine, we can relate to each other. And he's like, okay, I see someone who's focusing on content, who's focusing on a more modern way to create business, but he also is able to monetize it in a career in the mortgage industry. And I think that's really where we're going. I think people want to participate in social on a high level. And if it's not social media in the traditional sense, they want to do it something different. That's why I always talk about relevant and modern. Relevant is why people care. We forget so often that just because we put something out on social media and people see it, that if they see it, they're automatically supposed to engage with it. It may not matter to them. They may not care. That's why you have to talk more about who you are, not just what you do. Because to your point, the people that are in the industry don't even like the industry, if we're being honest, right? The consumers don't. But what we do is we like the opportunities that it gives us. And even the end consumer, Nobody wants a mortgage. No one wants a big fat mortgage with a huge payment. Yeah, give me the biggest payment that you've got. No, they want what the mortgage provides for them, which is a home, right? And so I think if we look at it from that angle, people are wanting to participate and do it in a more modern and relevant way. And that goes to the marketing and attraction and how we attract talent, how we attract those consumers. And that's what I'm pretty passionate about is not doing the same old thing. I did it at a high level. I was extremely successful with flyers and knocking doors and going, but that's not how business is done right now.
Yeah, it's funny actually that we've not really spoken prior to this podcast very much at all, and it's funny how our journeys are extremely similar, and we're pretty much in exactly the same space now. Where I was one of the top performers in previous employed life. I built a business for somebody else to six figures within the space of or six figures a month within the space of 11 months. Only got into social media in 2016, and now that's the main driver of my brokerage. And I do spend my time doing video, podcasting, audience building, chatting to cool people like yourself, and learning more. And there's some people in my network who are just absolutely blowing up on TikTok. 35,000 followers in the space of 10, 11 videos, because they're just doing. There was one where a guy was doing it, and I think he said something. It was just doing dances where, like, when you get the mortgage offer and just rocking in with a set of glasses and dancing. And then another one when it's like a client sends you an out-of-date postcard and there's a squeaking noise and he's lying on the floor and just squeaking across the floor, squeaking his nose on. It's just like, but their videos are blowing up because it's relative content. The millennials can relate to it. Even I can relate to it. I just would never have the idea to actually do that style because it's not my bag. Like you say, podcast is yours, video's mine, and we repurpose from that leverage. TikToks is other people's. Pick something and do it consistently is really the thing.
It is totally. I tell people all the time, you don't have to love video. If maybe you're a gifted writer, I still think right now there is a huge opportunity for anyone that's a talented writer or that can leverage that and scale to put 50 or 100 really good articles together on a blog and get some crazy good SEO, right? Search engine optimization. Video is obviously the most engaged type of content. I choose audio specifically because if you look at video, the average YouTube video is around 1.5 minutes. On Facebook in 2019, if you were one of the top 10 most watched videos on Facebook, your average video view is 71 seconds and the average view is around 10 seconds, right? Where in podcasting, the average episode is around 40 minutes. And a company called Edison Research says that 93% of people listen to most or all of an episode that they begin, and only 7% listen to just the beginning or less than half. So I'm going to have them for at least 20 minutes, 93% of the time. And the reason I share that is you have to understand in marketing, who is my audience, number one. Number two is what message or value am I trying to give that audience? And then three, then you need to choose the medium. Some people want to do a YouTube channel because they think it's cool to have a YouTube channel, and that's not where their audience is at all. They need to be on Facebook or whatever. For me in particular, I'm really focusing on short form video because of TikTok and Reels and everything that's blowing up. I am focusing more on Instagram Reels and then YouTube Shorts because I'm wanting to drive some YouTube channels. And what I heard actually on Clubhouse the other day is that while TikTok does over 1 billion views per month, the YouTube Shorts are doing 1.2 billion views per month. And so YouTube Shorts are still technically in beta. I think it's still a relatively new platform, but because YouTube has so much attention, they're already doing more views. And so I'm like, okay, how do I parlay that? How do I hack that? As an audio guy, just repurposing some short video clips, I'm going to reach an audience that predominantly consumes short form video. And I'm going to retain a few of those that want to go out and see the larger ecosystem. Most people won't invest 40 minutes of time into a podcast episode of Yours and Mine without anything else. That's why repurposing content's important. Or if I'm doing stories or reels of myself or my daughter, whatever, I have 4 daughters and a son, but if I repurpose with one of them or just do something out there, they may like, I can relate to that. I like that. Maybe I'll check out the podcast. And so I'm sharing that with everybody so that they understand content isn't just about your industry. It's not even about explaining videos and being experts. Sometimes it's just putting something out there. Like behind me, I have a couple of guitars. I'm a craft beer brewer. I drink craft beer. I've opened up a brewery. Like those are some pillars of content of mine, of my family: craft beer, guitars, mortgage, real estate, podcasting, whatever. I always just share content like that. I'm going to attract people to me like I am. The ones that don't, cool. It doesn't make me any better or worse. That's just not my tribe. And so that's why I think short form video for me in particular is going to really help drive that higher end long form through audio, because I'm giving people an opportunity to see why it's relevant to them to come listen to what we're doing over here. So I had a little soapbox right there, because this is obviously something that I love to do every day.
Mate, it's like listening to a brother from another mother, because it's just exactly the same stuff that I kind of say. It's like I was working with a client and I was coaching him, and in the background he had he didn't normally do it in these sessions, but in his background he had a whole wall dedicated triathlons. I was like, why have I never seen this in your videos? It's like the reticular activating system, the part of the brain. If you like somebody, they will subliminally want to watch it because they'll recognize the bell or the bike or the medal or whatever. Someone who likes guitars, when see that you're short form, will just watch it just because they see a guitar and they play the guitar. Or someone who's into travel, because behind you is a huge map. I can see Australia there. And it's like someone who's into travel will look just because it's something that they're interested in. And we're tuned in to find those commonalities of people like you will like you. First question we say to people when we used to meet them: what'd you do? Because you're trying to find that commonality, and generally work or job title is the thing that gets a conversation flowing rather than awkward silences. So I love that.
Well, it's funny. We are brothers from another mother, because I use that exact same analogy, but I say whenever you meet someone, like if you're sitting in a waiting room with a stranger, the first thing you bring up is the weather, because it's the one thing that you for sure have in common with that person at that time. It's the only relevant thing you have with them, other than, my gosh, this doctor's taking forever or whatever. But we still go to something that we have in common. What do you do? You're asking me what I do. I'm asking you what you do, because we're trying to find that commonality. And if people will realize that social media is about being social, all of a sudden the mystery completely comes out of this whole thing.
Yeah, without a doubt. It reminds me as well, my wife used to be a hairdresser employed, and it was always that thing with hairdressers. The first question is, have you been on holiday this year?
That's awesome.
Like everyone's got to go to, haven't they? So
yeah.
Yeah, that's really, really powerful, Phil. And I hope everybody's really tuned in to exactly what Phil said there. I'd recommend you go back and listen to that soapbox session in the last 5 minutes and just really pay attention to what Phil is saying, because there's so much value in that brief section. And if people go and listen to your podcast, Phil, on that front, because you've probably sparked some intrigue now, because you talk about marketing, you clearly know your craft, you're attracting people. What are they going to find when they go and listen to the Mortgage Marketing Podcast?
Yeah, our podcast started out really being tactical. My audience was mortgage professionals, because I wanted to network, collaborate, or potentially recruit them. The value I was trying to give was to help them build their business, and the medium was podcasting, because as we talk about, they could be at the gym, they can be in the car, whatever. Early on, we did a lot of tactical stuff. Now we've grown into all types of topics. We've had everything from, Gary Vaynerchuk, to huge real estate professionals, mortgage professionals, Evan Carmichael, which is a huge YouTuber, has been on. We've had some best-selling authors. We talk about everything from mindset to the tactical sides of building business, but we've gone way beyond just the mortgage industry or just mortgage marketing. We look at it through that lens. But my podcast is really about helping people grow in whatever capacity that is. And we've attracted some cool folks on there. And one of our recent episodes was a guy named Matthew Cox. He spent almost 13 years in prison because he perpetrated one of the largest mortgage frauds in U.S. history. During that financial crisis, he would buy up homes that were really inexpensive. He would dress them up a little bit on the outside and essentially create a fake appraisal. And then he would create fake people, like literally manufacture identities to borrow against this property, file a lien release, and do it again to where $100,000, he may have had $1 million leveraged on it. And he did this he was on the Secret Service's top 10 most wanted list. I shared that episode and did it. A guy met me in Clubhouse and reached out and said, would you be interested in having him on your podcast? And I said, absolutely, because any fiduciary business has a decision to make of whether you're going to be ethical or whether you're going to cut corners and do some shady stuff. He started out by whiting out a 30-day late. That's the first thing he did. And it snowballed from there to where he was on the run, creating fake surveys to homeless people to steal their identity in a different state, and creating fake ones that didn't even exist, and on and on and on. But he looks back through it. He found his passion in life for true crime writing in prison. He figured out who he was. And there's a really cool overcoming story. What does that have to do with mortgage marketing? Absolutely nothing. It's just we've created kind of a platform where people can come and expect to learn and listen and grow. And it's created a lot of other ideas for other podcasts. I'm just passionate about creating content and helping people. And I went very niche, and I think it served a purpose where we're able to grow. And yeah, man. So, if regardless of the type of industry you're in, you're going to probably take something away.
Yeah, that's superb. And this started originally in 2019 as the Mortgage Pro podcast, but in my arena now, it kind of, the stuff that we talk about really just applies to all of financial services. And some of my mentees are IFAs, are will writers, are mortgage brokers, insurance advisors. So last year we rebranded with a big online summit to Financial Pro, just to encompass the whole industry. But no, it's been a fantastic conversation this morning for you, this afternoon for me. I've thoroughly enjoyed it, and I definitely think there's some stuff we can do together in the future to help people in the US and help people in the UK in and around marketing. So
for sure,
great fun.
Yeah, well, I'm excited to have you on my podcast as well. I think you're scheduled here for a couple of weeks, and continue the conversation on the flip side, and let us learn from you and what you guys are doing.
Yeah, thank you very much indeed, Phil, for sharing your wisdom today. This is the Financial Pro podcast, and you mentioned vision, mission, and values earlier. The values of this podcast is perseverance leads to results, which creates opportunity. That's the pro part of it. What does pro really mean to you?
Pro means someone that's committed to doing it at a higher level, right? And we can do something professionally and still not be committed to doing it at a higher level. So I think pro to me, because I used to use a lot of times the hashtag mortgage pro, and I want people to understand, in my mind, to be a pro, it's that commitment to doing it better, cleaner, and kind of valuing what it is you're trying to bring to that particular marketplace.
Love that. Absolutely superb. And last but by no means least, if people want to connect with you, where's the best place for them to go?
Again, right now I'm really paying attention to Instagram. So at Phil Treadwell, from that, from my main Instagram page, you'll find my podcast page. And then my podcast website is just mmepodcast.com, stands for Mortgage Marketing Expert, mmepodcast.com. It's a link tree that you can link out to whatever platform that you listen on. See a few down here that we're on all of those as well. So DM me on Instagram. I'll have a conversation. I promise I'll respond, and I'd love to hear how everybody's doing, or add value any way I can.
So thank you very much indeed, Phil. I really, really appreciate you giving us the time this afternoon. If you found value in today's episode, then please go and reach out to Phil over on Instagram. Send him a DM. Let him know that you enjoyed it. We will put links in the show notes to all of the areas that we need to send you for Phil, to Instagram, to the podcast, and all the other bits and bobs. It's been an absolute pleasure to have you this afternoon. I think we're up to 130 episodes now. So if you haven't had a chance to listen back to previous ones on lead generation, sales, marketing, team building, business, then please go back and have a listen to. Again, we've had multiple people outside of the financial services industry coming in as well, just to share stories and words of wisdom around building a more successful business. So thank you for sharing yours today. It's been an absolute pleasure.
Man, I appreciate you having me on. You're doing big things in the industry, all over social media. I'm seeing you everywhere. Ton of great content. I'm honored to have you on. Excited to have you on mine as well.
Thanks, man. It's been an awesome chat. And yeah, likewise. Speak to you soon.
See ya.